Hello, and welcome to the Financial Architect for Canadians, where we're giving you the tools to build a solid financial future.
You're listening to The Financial Architect for Canadians with Alynn Godfroy and Glenn Baccaro.
Today, we're going to be talking about a topic that most of you would probably really consider boring. We're going to talk about insurance, the different types of insurance you can get, and why it's beneficial to you to have insurance. And I know some people don't want to pay for it, yada, yada, yada. But we're going to share some stories with you today where hopefully you're going to see the light of being well prepared. And well prepared means being insured for life and things that happen.
Exactly.
I'm going to let Lynn take it away for you.
So when it comes to disability insurance, you may have short and or long-term disability through your employer. If you have short-term, so if you have a benefits booklet, you'll definitely want to see what type of coverage you have. If it's short-term, so short-term will typically cover the first 4 months, potentially up to 2 years. And then long-term disability may cover you between that 4 months and 2 years, sometimes may extend till age 65. So it just depends on the structure of your plan. Again, look at your benefits booklet. Most company disability plans will cover you for 2/3 of your wage. So something to keep in mind. So you may want to look at having a top up if you're not able to work. So you can make sure, unfortunately, we see a lot of people, they're living at, 110 or 120% of their income because they have loans, lines of credit, and credit cards. So looking at having a top up may be a good idea. And the other thing I see too is that we're also busy insuring our car, our house, our iPhone, electronic devices, right?
I'm going to insure my iPhone, but I'm going to bypass life insurance.
Right? So I look at, those are your eggs, right? Well, I'm the goose that lays the golden eggs. If I'm not working, I'm not out producing and making an income.
Yep.
I need to make sure that I can still pay for my house. I can still, if I get in a car accident, I want to make sure that my car is covered. I find that so many Canadians are concerned about paying for all of these different insurances that they're not looking at their most valuable asset, which is your ability to go out and earn an income.
Right.
So super important. So one thing is disability insurance. And then the second thing is having critical illness insurance. So God forbid you're diagnosed with cancer, you have a heart attack, stroke, you're paralyzed, you run a coma, you lose your vision, you lose your hearing. Depending on the company, some companies will cover there's 4 major illnesses that about 90% of the population will claim on if they have a critical illness. So heart attack, cancer, stroke, coronary bypass surgery. But some plans will cover up to 25 illnesses. There are also plans that will cover your children. And what happens, you get a lump sum payment, depending on what your affordability is. Could be 50,000, 100,000, $1 million, just depends on how much you want to pay for. You're diagnosed with cancer, they give you a lump sum of $100,000. You can do what you want with that money to help yourself get better. So if you want to go for treatment in the States, if you're having to travel to Toronto to see a doctor there, maybe pay for some room and board for a family member to be with you. Perhaps if you're diagnosed with MS and you end up in a wheelchair and need to make modifications with your home, you don't have to show proof of what you use that money for. You can use it for anything that you want.
Nice.
And I've had cases. I have a client, it was a few years ago. We talked about her financial plan and her family, and she had, it was 4 or 5 family members that had cancer. It was just, she was one of 10 or 11 kids, and mom had it and a few siblings. And so we talked about critical illness insurance. So she bought it thinking, and I had to go with a sort of a non-traditional plan. It was a little more expensive because she's considered higher risk. It's in her family.
Right. Hereditary.
Yeah. Turns out right before Christmas, she had a heart attack.
Oh,
so,
wow.
I mean, I thought if anything, she would potentially be diagnosed with cancer. So she had a heart attack. And she owned a business. So thankfully, she was able to have someone come in and run her business for her so that she could take time to get better. Because when you have a heart attack, what happens? People usually go back to work. They go back to their old routine. They don't take time to take the proper steps to get better. And then they end up having another heart attack. So This woman was extremely thankful that she had that coverage. And she was able to take time off of work, pay her bills, have someone else run the business, and focus on getting better. So that's really the value of having critical illness. Yes, there's a cost. Yes, there's a, premium, but it's so much nicer to be able to have that affordability to pay your bills than have to worry about someone doing, a pasta dinner fundraiser, asking your family, hey, do you mind helping, cut the grass or let my dog out because I'm going to be going for treatments versus, them giving you money because you don't have the funds to be able to pay your mortgage or your regular bills. So if critical illness is something of importance to you, if you want to learn more about it, you can get in touch with us. There's a lot of information online. Just be careful about the information that you read and some of the different companies. There are a lot of wonderful companies out there, but there's some that they can get a little more expensive, and it may not be the most comprehensive coverage for you that you would like to have.
Talk to me a little bit about critical care insurance for your children and what you've set up for your son.
Yeah. So I've been doing this for almost 20 years, and I've unfortunately come across a lot of people that their children have developed epilepsy and have seizures. Some have been diagnosed with type 1 diabetes. I have a client, their daughter had cancer, and they were going back and forth to Toronto. And yes, the Ronald McDonald House is amazing. They stay there, they're fed, there's no cost there. But it's the using up your vacation time and then having to take time off of work. And you may have short-term disability, but they're not paying 100% of your wage if you're going off on a stress leave, right? So every plan that you have is different through your employer. So when I had my son, I knew I wanted to have a plan for him because I have my business. If I'm not working, I'm not earning an income. And just from seeing so many people struggle, I thought if something happens to Austin, I want to make sure that we have coverage. So he has a critical illness insurance policy. I pay for it. He was born in November. I had to wait until he was 30 days old to purchase the policy. And I pay in December once a year. To me, it's a Christmas present for myself because it's my peace of mind. So the plan is...
That's a great way to look at it.
It is a gift to me.
Yeah.
And so what happens is I'll pay for it for the next 20 years. I pray to God every day that nothing happens to him and I don't collect the insurance benefit. And in 20 years, if I decide that I don't want the policy anymore, I get all of the premium back that I paid into it. Or the other thing that I can do, he's 20, it's paid up. I don't have to I don't have to pay for the plan anymore. I can continue to own the policy. And if I wanted to at some point in the future, I could turn it over to him. But let's say he's 35 years old and I don't know, unfortunately ends up with cancer. Then if I'm the owner, I get the lump sum benefit. Or if I turn over the ownership to him, he would get the lump sum benefit.
It's kind of like win-win-win all the way around. Pretty much. Should anything happen, God forbid.
Yeah, and I mean, some people would argue with me, well, you could take that money and put it into an investment and maybe you would have more. Yeah, you're right, because all I'm getting back in 20 years is the premium I put in, so there's no interest that accumulates in there.
Right.
So yeah, that would be, I guess, the only downfall. There's always that one or two people that like to poke holes in it. For me, I'm okay with that. I'd rather know that money is being set aside. I've seen young families really struggle. And,
same here.
I love my business. I love my clients. But if my son gets sick, then I'm doing whatever I need to do, taking him wherever I need to go. And I don't have to worry about the financial aspect because I have that coverage.
I guess it comes down to what is peace of mind to you and what is it worth to you, right? Like if people want to put that money in investments or whatever, you got to look at how much accessibility are you going to have towards those investments should anything happen to your children, right? So, it's whatever peace of mind costs you. So I know that I see it so many times posted on Facebook about people hosting pasta fundraisers because their kids are sick and they have to travel back and forth either to London or to Toronto, take care of them. And like Alynn had said earlier, if nobody can predict the future, but if they'd been a little bit more better prepared and had an insurance policy where they wouldn't have to be relying on friends and family to raise funds for them, instead they'd just be asking them, can you cut the grass? Can you put my dog out,
And some people don't even know that this product is available. And then some people think, well, if I buy the policy, something bad's going to happen to my child. Like I've gotten that objection before too.
That's really projecting.
Let me tell you. Anyway, like I said, I've been doing this over almost 20 years and I've got all kinds of different answers.
Yeah.
You know what? You can also look at it as a forced savings. You know what? In 20 years, my plan is is to continue on with the coverage and make sure we always have it. But in 20 years, then you've got this money built up. Then you can use it for some education funds for your kids. You can help them do a down payment on a house, right? So the cheapest policy, I'm just trying to think off the top of my head, the one company we have, I believe it's $35 a month. So there's a ton of different variations out there. But I mean, if you're going to spend $35 a month at Tim Hortons or whatever else, would you rather do that and have your coffee every morning, or would you rather have the peace of mind knowing that, God forbid, something happens to one of your kids, you have the affordability to make sure you can keep paying your bills, to take time off of work
and take care of your family? Yeah. All right.
It's all about decisions and choice that you make, right?
Exactly. So that's two very important types of insurance to consider would be disability and critical care insurance, and we've discussed those at length. Another one that I want to bring to your attention is travel insurance. Now, we are a border town. We're located here in Windsor, and literally Detroit is 5 minutes away. You jump in to either on the bridge or you go through the tunnel, and you are in another country. And I think what a lot of us here, Canadian residents, especially in Windsor, they don't consider that fact that they're entering into another country. So because that we have like great healthcare here with OHIP in Ontario and such, they think that they're going to be covered for a lot of things should something happen in the States. Mm-hmm. And that is just not the case. Mm-hmm. So it doesn't cost you, like, it's going to cost you, but it takes a fraction of your time to make a phone call to an insurance company to get like a day trip insurance plan or something, just to go over for the day.
Yeah, ball game. If you're going for a ball game, going to the zoo, hockey game, shopping. Yeah.
I'm going to share a little personal story with you. I went to Michigan to pick up a friend at the airport. This is going back now 15 years, but it happened in February. Actually, we just celebrated the 15th anniversary on Saturday. Mm-hmm. I got not stuck, but while we picked up my friend at the airport and while traveling back on I-96, I lost control of my Chevy Blazer on some black ice and was T-boned by a semi-truck. So needless to say, I nearly lost my life. I ended up in 2 hospitals in Michigan. The first hospital I was brought to when the ambulance came basically looked at the level of my injuries and said, we're not equipped to deal with the injuries that I had sustained. They were talking to my wife at the time. So I had to be transported to Ann Arbor, which was the #1 trauma care unit in all of the United States. And those guys saved my life. But it's not cheap. And you got to pay for everything when you end up in one of those hospitals in Michigan. And when all was said and done, I spent 2 weeks in a hospital and my bill was nearly $400,000. So I can't just pull out my credit card and say, hey, charge it, So what happened was, my wife at the time was at the University of Windsor, so she had insurance through the University of Windsor, and I was on her family plan, and then we also had auto insurance, and OHIP covered, I think it was like $500 or something.
What?
It was like something like that's very, very minimal. Wow. They took care of something. But what ended up happening was lawyers got involved. The insurance companies between the auto and the university ended up getting involved. It got to the point I was getting phone calls from collection agencies like daily.
And you're trying to get better.
Yeah. Trying to recover
I can't even imagine that.
from this accident. And I had almost $400,000 bill that I had to pay to the University of Michigan in hospital in Ann Arbor. They're calling me daily. Insurance companies got involved. They were hammering out on who had to pay what. Thankfully, everything got taken care of. The University of Windsor ended up paying the majority of the bill. I think there was still like $50,000 that was left that had to be taken care of. And the University of Michigan hospital just basically went, forget it. And they just dropped it after a while. Oh all this to say, just because we're on a bordering town and you live in Ontario and you think you're going to be covered, you're not. get travel insurance. It's well worth the $25 you're going to pay for the day to go over, and the peace of mind. And people just don't realize, I'm going to go to a Tiger game, I'm going to go see the Red Wings play. You trip and fall, you hit your head, you end up in the hospital. You have to pay for every single thing. Like the receptionist is going to give you like stationery for an appointment. If you have to get an x-ray, like at the ride to the hospital, if you take an ambulance, you have to pay for everything. So I just can't stress enough. Travel insurance, travel insurance, travel insurance. Get it if you're going across the border. It's well worth the investment. So you have been listening to The Financial Architect for Canadians. I'm Glenn Picarro, this is Alynn Godfroy, and we're so happy that you tuned in with us. We're helping to give you the tools for a stable and solid financial future. We'll check you next time. Go out and make it a great day.